Welcome everyone to NBWA's webinar. We're going to be talking to you today about the beer industry outlook for the summer of 2020, selling beer and staying safe during COVID-19. I think all of us are dealing with a very, very different industry than we were just 65 days ago. As we look at going into the Memorial Day holiday, preparing for the other big marks of the summer like 4th of July and of course Labor Day, this industry looks very different than it did just 65 days ago. As NBWA moved forward and as we were dealing with this, we really identified 4 objectives where the association kind of rallied around. What I'd like to do is just briefly share with you some specifics related to those 4 objectives. First of all, getting the industry deemed essential was absolutely critical. I can recall being on the telephone with Beer Institute President Jim McGreevey as we were talking to a number of food industry executives and officials for the government about helping craft guidance as it relates to what businesses were deemed essential. And we really did work to recognize, you must understand the challenge of this, of both the health and the economic dynamics of this crisis. And we were very, very clear that we wanted to work both with the states and with the federal government to ensure that beer was designated an essential part of the grocery and food supply chain. And then finally, we also wanted to make sure that we were articulating this in a very serious, sensitive, and sober way. The second objective that we identified was the whole notion of being able to move product around. As you all know, this was on or around March 13th, 14th, 15th, 16th, as the national emergency was being declared. We had thousands and thousands and thousands of barrels of beer that were positioned for all of the spring holidays. St. Patrick's Day was canceled. We had opening day for baseball. We had March Madness. We had all of these many and varied challenges as it relates to the calendar, laid on top of stay-at-home orders and shelter-in-place orders affecting 20% of our volume accounts. So it was very important that we get relief from federal trade practice restrictions to move that product around, while also working with our suppliers to share the burden on what we knew was going to be an unprecedented amount of expiring product. Third objective, and this was also very, very important, was to recognize the whole notion of protecting our employees. There's 142,000 hardworking men and women working each and every day to make this industry great. And their safety became a significant challenge and an opportunity. And we wanted to share best practice information in real time. And I'm hopeful after this webinar that you will share with us what's going on in your market and what we can do to mitigate risk, to operate and continue to operate safely, and to work to keep this industry open and keep this industry safe. And finally, what we identified kind of as our 4th objective was to work forward and toward relief and recovery. And obviously this includes a whole host of information. First of all, identifying policy objectives that would assist our members, and we're going to talk a little bit about that today. But also to work with you and the rest of this industry to advance the industry, to advance the industry's agenda. And so the first person we're going to hear from this morning is a person that we tasked to kind of spearhead this best practices and information sharing. And that's Kim McInnish, who's the Senior Vice President and Chief Financial Officer for NBWA. Kim?
Thank you. As Craig just mentioned, NBWA has worked during this pandemic crisis to develop and distribute value-added information in real time. I've spoken with a number of you over the past 10 weeks, continually soliciting best practices to share with our entire membership. There has been a steady stream of nearly 50 COVID-19 related communications since mid-March, as I'm sure your inbox can attest to. These emails include ones related to federal guidance, and legislation, and one's providing distributor best practices, guidances, and resources. All of these communications are housed on the MBWA COVID-19 resources page, a secured members-only page that can be accessed at mbwa.org. The communications are organized by category and date. You will also find the links to example forms and documents referenced in the best practice emails. The first bucket of emails relate to federal guidance and legislation. Lori Knight and Paul Pisano will elaborate on these topics in a few minutes. The second bucket of communications includes best practices shared by fellow beer distributors, guidance from CDC, OSHA, Department of Labor, EEOC, and resource links that MBWA found helpful and thought our members would find helpful during this crisis. Two important pieces of communication dealt with what to do if an employee tests positive. We included in the first communication some tips and examples of COVID-19 response decision trees. There was a generic CDC decision tree and also two specific examples from distributors in how they worked through what to do if an employee tested positive. We also included communication plans to use with employees and retailers as you work through the exposure issue, and a sanitization plan for your facilities and vehicles. We followed up a week later with tips from a distributor on the front line of the crisis. A New York distributor generously shared advice and resources in the midst of being at the epicenter of the crisis to help other distributors be better prepared when the virus arrived in their market. They shared advice on company-wide communications and procedures they put in place. They also shared with us some specific scripts that they used for talking with their employees that were exposed, and also with retailers to facilitate the tracing, and also documents they used for tracking and communicating with employees who are positive and are quarantined. So all invaluable resources. Next, additional topics were operation-oriented, all focused on employee health and safety, and I will touch briefly on a few of these areas. We shared a wide variety of ways that distributors have been communicating with their employees, ranging from weekly emails with all new information or processes from that week related to COVID-19, to weekly video messages for all employees, to dedicated web pages or SharePoint site with all company COVID information, to daily leadership team calls or virtual meetings. We provided many examples of how members are working to minimize risk with new processes, such as sanitation of facilities, only allowing essential personnel in the warehouse, staggering schedules for truck loading and warehouse crews to reduce overlap, and promoting contactless deliveries. Cybersecurity is also top of mind as COVID-19 scams and phishing schemes have increased. And we offered tips to increase network or data security as more employees are working remotely. Distributors shared ways they had adapted pay for performance so that it reflected the current volumes and channel trends, in ways they recognized their frontline employees during this crisis. We included ways that members have creatively utilized employees with downtime, mostly related to on-premise teams needing to be redeployed rather than laid off. And MBWA included information on how to communicate your safety expectations to your retailers as an additional layer of trying to keep your employees safe. MBWA hosted two COVID-19 related employment law webinars led by Teresa Gallion, a labor and employment attorney based in Austin, Texas. Both webinars were highly attended and provided the latest guidance from the EEOC, Department of Labor, OSHA, and how to apply the ever-changing leave laws to your company. The webinar recordings and decks, along with example forms, are available on the MBWA COVID-19 resources page and may be particularly useful to your HR team. Next, we had a number of communications that dealt with on-premise accounts and draft beer. Distributors shared their best practices and, in some circumstances, very unique ways of retrieving kegs, decanting them, and disposing of expired beer, with ideas ranging from using your local fire department's water tote to partnering with a local bakery. Please reference these communications for a variety of ways to tackle these tasks and links to resources that you might find helpful. Also included are 2 examples of specific product retrieval plans that distributors used for their shuttered on-premise accounts and the related TTB guidance. In the past week, we have shifted our best practice focus to 2 categories: back to business and minimizing risk. Last week, we sent out an email that included an example return to work checklist. In fact, there were 2 of those checklists, one much more exhaustive than the other, but I don't expect that all sections of the checklist are going to relate to your business. But they are good guidelines to get you pointed in the right direction as you begin to bring 100% of your team back to your facility. And at least for the foreseeable future, everyone must be alert to physical distancing protocols and disinfecting requirements. Lester Jones shared data resources to help you get the right beer in the right place as your market reopens. And the email also included state-by-state links detailing reopening guidance and relaxed alcohol laws. Gabe Chrisman will touch on those in a minute. For the next bucket, minimizing risk, we will continue to add best practices targeted to minimizing employer risk or liability. I cannot overstate the importance of document as we continue to move through this crisis. You should document all company and/or employee decisions at the time you make those decisions so that you can go back and see what guidance, rules, and knowledge were in place at that point as the crisis continues to evolve. In last Saturday's email, we included an example of a distributor's written return to work plan. Every distributor needs a written return to work plan. This plan becomes part of your employee manual, and each employee should acknowledge that they received it. We also address the business insurance policies potentially triggered by COVID-19 and details to consider related to claims. Of course, this includes workers' compensation, employment practices, and property liability coverage. And OSHA has determined that in certain circumstances, COVID-19 is a recordable illness. Everyone also needs to be alert to potential claims related to employment law with particular attention to areas of leave, unsafe work environment, discrimination, and non-accommodation. In addition, distributors are sharing their best practices for contactless payments and employee temperature checks. So to wrap it up, as the country begins to reopen and we shift to these new best practice categories, MBWA is working to help our members transition from being an essential employer to a safe employer. Thank you.
Thanks, Kim. I think that was a terrific, comprehensive update of some of the things that we've been working on and our ongoing work together. I can't emphasize the fact that that has worked together. We need to hear from you. We've had tremendous success by being able to pump out information in real time so that everybody can deal with this challenge more effectively. Now, as we prepare for summer, it's going to look very different. And to give us an update on where we are in 2020, but more importantly, where we're going to turn things over to Lester Jones, NBWA's chief economist. Lester?
Thank you very much. Let's go to the first slide. So part of all that we're dealing with in this crisis is needs a little perspective, because the beer industry is actually a pretty good reflection of what's happening in the marketplace, the economy in general, and what's going on with us right now. When you look back, this is a big slide, and this is the big picture, guys. Going all the way back to 1900, the beer industry has been very reflective of the times and changes that have impacted our beer market. Certainly last year in 2019, we had a good year, actually. Probably the industry was up almost, probably 0.6, almost 1%. I think we can say that by now as the revisions are coming in, that we had a good year. And per capita consumption for 2019 was pretty much what it was in 2018, which is a big win for the beer industry. I've marked up those little red lines just to guys remind you that, back in the Prohibition era, we were drinking less than 1 gallon of beer per person. Obviously, that was all medicinal, but as you walk through time, the beer industry has had its ups and downs, and no doubt that this period of time that we're entering in the second half of 2020 is going to be just as dramatic and it's going to be challenging for us. So take a look at the next slide. And just remember, I've talked to lots of state associations, and we've always kind of focused on the idea that per capita consumption of alcohol is relatively stable, it's relatively predictable. It's what we consume, where we consume it, and how much we pay for it that tends to change a lot. When you look at pure alcohol consumption, total ethanol, equalized down to the ounce of alcohol, we've consistently been consuming around 2.5 gallons of alcohol per person per year. And what that means is that the mix changes, how we drink it, where we drink it, the combination of high end and low end, and the combination of beer, wine, and spirits is always changing, but we know that the total is relatively stable. Now, if you look at that 2.5, you can kind of see that, in 2000, it's a little bit below 2.5. In 2019, it's a little bit 2.5. But if you look at the next slide, what I do is I zoom right in on these 2-digit decimal places here. I just do that little statistical trick where I monkey with the axis here to highlight some of the differences. And what you see is that in those recession years of 2000, 2001, yes, there are little drops in the amount of alcohol we consume. And as the economy expands and things grow, we consume a little bit more. So there is a little bit of economic impact to it. 2008 and 2009 saw drops. And then once we got to the recovery period, we started recovering. So it's not so much that it's a big influence on how much alcohol we drink. What it is it means that we have a little resiliency. It's that, people will tend to have a drink in good times and bad times. It's the mix that we have to focus and pay attention to in 2020. What are people drinking? Where are they drinking it? And how are they drinking it? So when you look at just the first quarter of the year, this is kind of the industry supply. This is the beginning of all the beer in the marketplace. This is where it all starts. This is where brewers produce beer and ship it out to wholesalers. This is where importers bring it into the country. I call it the supply, the amount of beer that's available for us all to drink. And I have domestic and imports here. I have 2019 versus 2020, and you can basically see for the first 3 months of the year, the industry was pretty much flat. We saw some growth in the import segment, that 3.5 million cases, 3% volume increase. That took us from an 18 share to an 18.5 share for imports. You see that basic decline in the domestic number, but all in all, mixed together, a flat industry. So what we're seeing in the consumer side, and when you look at all these big numbers and all these big increases in the off-premise, you got to remember that that's a whole bunch of consumers that are now being channeled into fewer and fewer retail trade channels, which by definition are going to give you those big lifts. So remember, I'm looking at this market as in the totality, in the aggregate, trying to get 100% of the cases, not a subset in terms of whether it's grocery store, convenience store, or on or off premise. This is the aggregate of the market. And for the first quarter, things are relatively flat. And what's important to note is that these are the beginnings of the numbers. This is without taking out all that beer that was stranded in the on-premise in the last 2 months of March. So a lot of beer is still left out there in the marketplace that never got consumed. And as consumers went looking for beer, they went to their grocery stores, they went to their big box retailers, they went to their mass merch, and they pulled beer out of there. So there's a lot of accounting that still needs to be done for this industry to really get a handle on how much beer people actually drank during this crisis. Let's move on to the next slide. Yeah, the Beer Institute releases national and state beer shipments every month, and I've taken the data from January through March 2019 versus January through March 2020, and you can kind of see the state shipments are a little off from the supply side because there's inventory and beer in transit. But for the most part, you see down at the bottom, the industry was pretty close to flat, let's call it that. And you can see that some of these other markets have taken huge hits in March, places like Oregon, New York, Michigan, DC, one of our biggest on-premise markets, all down large amounts of volume, basically because these are over-indexed in the on-premise. they're basically closed. And while we're hearing a lot of stories about beer being up, there's places where beer is down as well. So pay attention to the aggregate volumes and keep perspective on where we're headed and how these different states are responding to beer demand. And if you move to the next slide, we work with FinTech, and I track weekly kind of the volume of beer in the marketplace. And it's for about 30% of the industry. So it's not a complete picture of the industry, but what it is it's a balance of on and off premise channels. And it's a good sampling from around the country. It's about, like I said, 30% of the US beer market. On that axis, it says axis titles, should actually say 100, index to 100. I basically index all the average weekly volumes to 100 and then kind of compare every week of how the industry responds relative to where they are on an average. We all know week 12 pantry stocking was huge. It was a week that was in proportion or on par with holidays like Memorial Day, 4th of July, and Labor Day. It was a huge sell day for beer distributors and beer retailers around the country. And that 140 basically means it's 40% above the 100 mark. And if you look at the blue line, which is about 90, that means in that week 12, beer distributors moved 50% more beer in week 12 of 2020 than they did in week 12 of 2019. It was a huge beer week by any measure. But what happens is we kind of had a pause in week 13 and week 14 that brought us down. And then you can kind of see how things lifted back up in 16 and 17 and kind of came back to about average. So we're only a couple of weeks into this. Consumers have stocked a lot of beer into their pantry. How they drink through this and how they come back to retail, and do they go back and buy larger packages, and what they buy is all up in play. But we're going to move on and we're going to talk a little bit more about how significant this week 12 was for the industry. What I did with using the FinTech data is I took the on and off premise, and you can kind of see on that one side of the chart where it says 2019 year-to-date week 16, the industry in the FinTech was 16%. So majority of the beer sold in the off-premise, 16% sold in the on-premise. When you take what happened in 2020, you can see that in the first 12 weeks, what is kind of pre-week 12, the industry had some good on-premise activity. But when you look at the industry post week 12 through 16, you can see how that on-premise just shrunk down to 2%. A little bit of activity on the on-premise, but basically it vanished. All the beer flowed directly into the off-premise channels. And that's where we got all this great scan data out of Nielsen and IRI. And it really redefined what we're moving, right? I mean, clearly you know this, but here's a little illustration to show people in case they don't get it. Pre-week 12 rush, kind of I call it the pre and post pantry rush, about 9% of the industry was in keg draft beer, 30% was going in bottles, and almost 60% was in cans. When you look at that post week 12 lockdown, when the on-premise was shut down, those kegs virtually vanished from the marketplace. All of that volume just dove into the can business. You can see how bottles went from 31% to 32%. There wasn't a rush on bottles. This is a rush on cans. This was a huge rush in the marketplace where people were buying large packages and a lot of cans. So it really disrupted the industry supply, and that's why you're hearing people talk about how there's kind of a shortage of canned beer in the market. It's not that there's a shortage of the supply of actual aluminum cans. They're doing the best they can. Can shipments were, I think, up almost 8% in the first quarter, and bottle shipments were still negative, but they're better than they were in the past. So still a lot of opportunity to play with the package mix. Don't get fixated on a shortage of cans when there's also cans and bottles out in the marketplace, and there's different package sizes that people will be looking for to purchase. While you might not be able to get, consumers will be frustrated, they might not be able to get the exact packages they're going to get, but it's not like we're going to have a shortage of beer, and we're not going to have a shortage of cans or bottles to put that beer in. I pulled this slide from, had TD Lynx from Nielsen pull this slide together because it just gives you a perspective of how different the marketplace is going to look in the post-COVID reopening. This is just by zip code, by county, a heat map of on-premise locations. And it makes sense. You can see Los Angeles and San Francisco and Phoenix, and you can see the red hot spots where we have lots of on-premise locations. You can see down in that bottom right-hand corner, the total 221,000 on-premise accounts, a little breakdown they gave us of, you know, how these accounts break out for beer, for alcohol beverage selling. But the reality is that with on-premise lockdown and bars slowly opening and restrictions on capacity, you know, these are the spots where it's going to be really hard to get back to any level of beer supply and beer demand that we've had pre-COVID. So in the other areas that are a little more suburban and rural, not so much focused on the on-premise, you can expect to see a little bit stronger beer demand out of those markets as we move into the holiday weekend and the summer selling season. And recovery is going to be driven by jobs. I've said many times that if there's no dinero, there is no cerveza, and you need money to buy beer. It is not a free thing. You just can't get it because, well, because people like you. You can get beer because people like you, but anyway, you got to buy beer. Let's just stick with that. And having a job in the post-COVID environment is going to be very, is going to be tough. We're looking at 15, 20% unemployment. We know the unemployment claims are way backed up, and we haven't had time to kind of do a correct accounting of how many people are unemployed, but it's a lot. And the industries that are highly impacted are listed here. This is Conference Board data, and they went through some of these spots. Places like Myrtle Beach, which is a high tourist area, requires a lot of people to come in and has a lot of on-premise and a lot of tourism. You can see the Orlando, Kissimmee, Florida area, up in Atlantic City, New Jersey, and you can see the hot spots. I mean, these are most impacted metro areas that we're going to see lots of industries that are going to be highly impacted, from tourism to education to just basically high on-premise markets as well. So it's going to be a tale of two cities. I know Craig will steal that from Mr. Purser, but it is going to be a recovery and a tale of two cities, as some markets that are not so over dependent on tourism and transportation and subways and things like that to move people around. And it's going to be a tough recovery from many markets, and some markets will bounce back a lot sooner. So we're going to have to pay attention to kind of these zip codes and these counties and these metro areas that are very different in how people live and work relative to a post-COVID environment. And like I said, getting back to work will be regional and industry specific. You're going to have to pay attention to kind of the industry makeup and the dynamics in your local markets. I mean, are there growing occupations in there? Are there shrinking and industries that are laying off? Paying attention to both the jobs and the industries going to be incredibly important moving forward. And what types of beer those consumers who are actually on the positive side of the ledger in terms of keeping their jobs and having the income may be different and radically different than that they were just this same time last year. So pay attention to your market, get to know your market, and get to know the industries and the occupations that are going to be growing in the next 6 months. Yeah, just let me point out that, you know, we did our beer purchases index in April, and it was the tables turned on the beer market. Literally, this chart I would never thought I would have seen since we started doing this data in 2014. The imports to crafts, that orange line, which are all below the 2019 numbers, and then when you look at premium lights, premium regulars, and below premiums, they are all above. The entire industry, except for the FMB seltzer categories, below 50, which indicates that there are a shrinking or contracting amount of orders coming out of beer purchasers. The only thing in positive territory is FMBs and seltzers at a 72, which indicates an expanding amount of orders. But across the board, the tables were turned on the industry in April. We have the May Beer Purchasers Index is out there in the field right now. You can log on to the beerinstitute.org/BPI website, sign up if you'd like to get early release of this data and keep track of it. The May number will be certainly telling in terms of what beer distributors are trying to order from their suppliers and where all of these segments net out and stand in the next coming month. So stay tuned for that one. I just like to say, the summer 2020 is going to be moving more boxes in the off-premise. There's no doubt about it. I have some friends out that sent some pictures of the trade. Going to be lots of big boxes, easy access, trying to grab them and go. People are going to spend less time browsing around in grocery stores. I think that's pretty obvious now in general. And it's going to be a different beer market. We're going to have to rebuild the on-premise slowly and cautiously. People are, just because orders are being lifted, people are going to make their own decisions about their own safety, and they're going to come out slowly and cautiously. We see that here in Austin. We've been open since May 1st, and even though it's 25% capacity into restaurants, I haven't seen a restaurant yet that is busting at 25% capacity. People are coming out slowly and cautiously, and that's how it's going to be. It's going to be a slow, steady, cautious recovery for the on-premise, and we'll have to see how people respond to the rest of the general marketplace. I can see by Patty Rousey's clock that I am a few minutes past my time, so I will turn it back to you, Mr. Purser. Thank you.
Thank you, Lester. Excellent presentation. Two takeaways that I saw from that I think we need to add to our mix as we're planning for the summer, especially related to employment. And this is really important as we segue to talking about what the government is doing around this crisis. But one of those last slides that Lester showed two themes that are worth noting. Those marketplaces that are dependent on travel and tourism, that are destinations, absolutely hurting. The other markets that you may not have noticed, or you may have thought, why is Southern Louisiana and Midland Odessa on that list? Because of energy. And the energy sector is seeing job loss, and as it relates to supply and demand for fuels, and that's just something that's got to be added to folks' mix. One of the things as you're planning for the rest of the year that we haven't dealt with is this level of unemployment. That may go into your forecasting as you look at product mix, as you look at what you can to see what that consumer is, where they're going as it relates to beer products. So thank you, Lester. And I think we're going to continue to provide you all with a more steady stream of information and analysis like this as we build through the summer and finish out 2020. As I mentioned, when it comes to the government and the government's response to this, it's been unprecedented. Over $2 trillion that has gone out the door for aid and assistance, largely focused on these segments of the population that have been shuttered and have been dramatically and very, very quickly shut down, and folks have been unemployed. To give us an update on what's going on in Washington, we're going to hear from Laurie Knight, our Executive Vice President of Government Affairs. Laurie?
Thank you, Craig. I'm going to start off by covering 2 or 3 topics that are timely and getting a lot of attention right now in the nation's capital. The first topic that I want to cover is the details, or are the details, of the Paycheck Protection Program. When Congress passed its third stimulus package in late March, it included many loan facilities at various agencies at the federal level. One very, very popular program that was established by the Small Business Administration is the Paycheck Protection Program. The popularity for the program is due to the fact that it is has a loan forgiveness provision that is very generous. It also has a 1% interest rate. So there was a lot of activity and focus on the PPP early on. Some of the negative publicity around the recipients of the PPP funds caused Congress and the administration to take a double take, or do a double take, on who was receiving these loans and what the criteria was for receipt of the loans. So what is some of the latest activity in town with regard to the PPP? After there was bad publicity for entities like Ruth Chris Steakhouse and others taking the loan, the SBA issued what was called and known as Question 31, that basically established some guardrails on the certification process and had a retroactive effect. And that Rule 31 from the SBA said that anybody who had taken a loan should have taken into consideration their business activity at the time, as well as their ability to and access to other sources of liquidity. This question 31 caused a lot of reconsideration in the business community as well as Congress. So we in DC have been waiting and watching and pushing for SBA to release additional information on exactly what they meant by question 31 and to offer more guidance to the community, the business community. So that additional information was forthcoming. On this week, we got information out of the SBA in the form of question 46, which issued more direct guidance on the loan certification concerns and distinguished the loan amounts over and under $2 million. And we will talk more about that momentarily. In addition, anybody that is any recipient of a PPP loan needs to be aware of and understand that the interim final rule process at the SBA is ongoing and that the period for comments will be closing on Friday, May 15th. Subsequent to the closing of the interim final rule, the agency will be initiating and distributing additional rules, the final rule, and will most likely be issuing additional FAQs going forward. So with that, let's go to the next frame. Question 46 in greater detail specifically said that loans under $2 million will be deemed to have met the certification requirement for necessity, which is a good thing for those recipients who were waiting and watching to see what the SBA was going to do, and clarifying that if the loan is less than $2 million, it's going to be deemed as being a necessary loan and the certification requirements have been met. One of the reasons that the SBA made this decision is that they're making an assumption that businesses that received loans under $2 million were unable to access other sources of liquidity. So the specific language is included in the visual presentation, and it's again reiterating that any borrower who's received a loan less than $2 million is deemed to have met the certification process for necessity, and the loan certification was made in good faith. With regard to loans that are over $2 million, and let's move to the next slide, those loans will be reviewed. The TTB, not the TTB, the SBA did state early on that they were going to be reviewing all loans over $2 million. However, the question 46 that was issued this week says that even if those loans are deemed to not meet the standard of economic uncertainty and therefore not meet the certification requirements, the SBA is going to provide notice to that loan recipient that they do not meet the standards and allow that loan recipient an opportunity and the ability in time to return all of the funds, and that if that is done, that the SBA will not be pursuing any further action or investigation with regard to the loan certification process for that loan recipient. So that is a relatively positive outcome as well for those loans over $2 million. In addition, on Wednesday night of this week, the SBA issued an additional rule, question number 47, moving the safe harbor deadline from Thursday the 14th to Monday the 18th. So anybody that has received a PPP loan has until Monday the 18th to make further evaluations of question 31, question 46, and under question 47 has until Monday, March 18th to return the loan. With that, Dave, let's move on to the next. PPP best practices. This is just a suggestion for any loan recipient that you can go through this checklist and take from it what you will. But here are some good things to keep in mind if you did receive the loan and what you need to do to ensure you're maximizing your opportunities for loan forgiveness under the criteria at SBA. First of all, stay up to date on the rules and regulations. And we are doing, we are we are sending out guidance and information, as Kim has mentioned, on all of the updates over at SBA and Treasury, as well as the IRS. So in those communications that we're putting out, when you see information on the PPP program, make sure that you're being attentive to what those details are, that you're up to date on the rules and regulations, and take time to understand what they mean. When you're implementing your PPP funds in your businesses, you need to meet the letter and the spirit of the laws and the rules. So be conservative in your interpretations and be responsible with regard to both the letter and the spirit of that rule. You need to have more than just awareness. It's not going to be adequate to just know that, just to say that you are aware. You're going to need to put some controls in place to ensure proper adherence. Some of those controls include establishing, and this is an important criteria, you should establish a separate account for the PPP funds. Don't commingle with existing accounts. Maintain an easily understood paper trail of how PPP funds are allocated, and document what you're doing with that. You may want to consider designating a point person, a primary point person, to be the overseer of that account and the PPP decision making and the PPP fund execution. It's probably not a bad idea to have multiple signatories on the account. You may want to consider establishing your own internal audit and review process, just to have a backup plan in place and system in place for checking what you're doing. When you're making your decisions, it's advisable to document the decision-making process, how you reach the conclusion, and what that conclusion or outcome was. You also should document your internal control process. So if you're asked to verify what you were doing, that record is already established, and you can just provide that information to your lender and ultimately to the SBA. Use common sense in your decision making. I heard in a conversation last week, one of the lawyers describe it as saying, don't do it just because it's legal, but dumb. So use common sense and don't stand behind it was legal, however, it was still a dumb decision or a foolish decision to make. And then last but not least, if you have questions about what you're doing and need more information, make sure you're asking. Feel free to reach out to MBWA, reach out to your lender, reach out to your attorney, reach out to your accountant, reach out to someone if you have questions or uncertainty about any of the details of the program. And with that, let's move into the next topic of conversation. The latest and most recent information on the legislative stimulus efforts in DC. The House this week introduced a broad package for stimulus, a broad proposal for stimulus package number 4. The bill was introduced on Tuesday and is scheduled to be voted on this Friday. The proposal in the House is allocates an additional $3 trillion in funding that includes things like $900 billion for state and local governments, additional funding for testing, extensions of loan programs and different variations of that. With regard to the PPP program, I will say that the House proposal does include an extension from the 8-week loan period to 24 weeks. So there's an extension in the PPP as well. This is viewed in DC as a broad initiative of a Democratic all-encompassing wish list of provisions to be included in the next package. The Republican leadership in the House and Senate has already rejected the House bill, and both parties are talking about that it is a beginning point, a launching point for discussion on what ultimately will be in the 4th package. On the Senate side, there is a much slower approach to the next round of inclusion of provisions in the stimulus effort. The Senate can be categorized as tapping the brakes on spending and really looking with a greater focus on what deficits the country is facing going forward as a result of the 3 prior stimulus bills. The Senate leadership is also interested in assessing the impact and doing a further evaluation of the effects and the effects of the past stimulus programs and what the efforts will produce and what that outcome will be. And then last but not least, an important point for the business community and business owners. Republican leadership in the House is focused on including language in the next package to limit liability exposure and allow for protections for businesses, particularly those businesses that have been designated as essential, and making sure that there is a narrow focus on liability protections going forward for those businesses. So there'll be a lot of negotiation around that point. So stay tuned for more activity from Congress on the next stimulus bill. Again, the House plans to vote on Friday, and the Senate is going to take a much more methodical approach. Moving beyond the stimulus package, just to talk real quickly about the Perishable Food and Beer Tax Credit Coalition. This is the coalition effort that it includes roughly 16 different trade associations that represent a broad variety of food and beverage interest. NBWA back in March, late March, had conversations with our supplier partners at the Beer Institute, at the Brewers Association, as well as the American Beverage Licensees, and talked about what could be done on behalf of the industry with regard to the product that was going to be going out of, in particular, draft products in the on-premise accounts that were closed overnight due to the stay-at-home orders. So the beer industry wrote to both the House and Senate leadership back in March, expressing our concern for this problem and socializing the issue of a further discussion on the need for and request for a beer tax credit to address some of that loss in inventory in the industry. As a part of that effort in the beer industry individually, it grew and expanded to include others in the food industry, from folks like the National Restaurants Association, the American Gaming Association, which represents the casino and gaming industry, the food distribution industry, the American Beverage Association, and many, many more. So the coalition has grown and is in work in progress and continues to grow. What the effort is, again, is to allow businesses that have been negatively impacted by COVID-19 and the closures that were left, those businesses that were left with perishable or spoiled or unmerchantable or out of code inventory, the opportunity for a limited tax credit for the recovery of the input and the cost of that inventory and product. We're working and have made good progress to address this issue on both the House and Senate side, with both Republicans and Democrats on the House Ways and Means Committee, on the Senate Finance Committee, and where the rubber would meet the road on this is that the temporary tax credit would be eligible or available to the entity that was in possession of the inventory on the date that it spoiled or on the date that it codes out. So there is more work to be done, most definitely, moving forward on the perishable beer tax credit effort, but progress has been made. And with that, I'll turn it back over to Craig.
Thank you, Lori. And just like everything else you're hearing, you heard it from Kim when it comes to best practices related to employment, and you heard it from Lori when talking about PPP. I'll add that to the whole notion of your expiring beer products. Document, document, document. It's just a recurring theme as it relates to all these many and varied moving parts. Next up, I'd like to hear from NBWA's General Counsel and Senior Vice President of Industry Affairs, Paul Pisano, as the beat goes on when it comes to alcohol regulatory issues and the work we have in front of us. Paul?
Thanks, Craig. And it's great to talk to everyone here again. I wish we were in person. There is two items I'd like to cover today that may seem at one point unrelated, but ultimately they're all interconnected. The first is the issue of litigation. Litigation is still out there. It is still impacting beer distributors. Even if COVID had not happened, this would be a top priority for your association, facing challenges to how alcohol is regulated and the role that the middle tier plays in alcohol. So quickly going through that, the Supreme Court gave us some good news by not taking Total Wine's antitrust lawsuit. That was a good news, but this summer will still be busy. Walmart has an appeal out of a Texas law, and a Monster arbitration against a beer distributor are also before the Supreme Court this summer. So we will be thinking about those cases as well at the Supreme Court level. We had a good win in the Sixth Circuit, a retail shipping case against Michigan. Sixth Circuit had a wonderful opinion for state regulation. Center for Alcohol Policy had an important amicus brief filed in that case. But there's over a dozen pieces of litigation out there, and I'm not going to go through them all, but it just underscore a reminder in our craziness of COVID, we still have to mind the store on our regulations and working with your state attorney generals and regulators to defend the system. And if you can, next slide, Dave. If you're interested in following about the litigation, this is a site we run here at NBWA, and we post the updates on the various litigations out there. So for more information, please look at Alcohol Law Review. For the rest of this time today, I'm going to talk about some of the actions TTB has taken. As a result of this pandemic, there has been a whole host of changes to your operations, to retail operations, and the laws that govern it. TTB has put out three types of guidance, three forms of guidance on trade practice laws. First was right during the midst at the beginning of this, right before St. Patrick's Day, where they put out a guidance clarifying what's allowable on product returns. Then later, early May, they put out some guidance on how to do beer destruction. You know, it's very important if people want to get the excise tax back to properly document it and get the work and get the beer destruction done properly. And then on May 8th, they put out a more comprehensive guidelines on 5 additional trade practice guidelines, and I'll spend the rest of the time walking through those. So on that specificity on the TTB guidance, the 5 items were product returns. And I will not read all this text because you can replay this or slow it down to read it if you would like, and all the actual guidance is on the TTB website. But on product returns, what they did was clarified that because of COVID-19, events that were canceled or accounts that were being shuttered because of the COVID orders by government, there would be an allowable returns. Normally, that could raise a lot of issues about the consignment sale problems, but the TTB said it's okay in this situation to do the returns as long as you didn't sell it into the account saying, hey, if it doesn't sell, I'll buy it back. That's always a no-no. TTB is still saying that's a no-no. But given the widespread destruction here of the on-premise market and other accounts, they authorized this. So the product returns guide notice is up there. So please review that. The next item they looked at is the retail assistance funds. This is a very important. We're our great on-premise accounts and off-premise accounts that employers are having to lay off. Bars have to lay off their employees. There's been a bunch of retail assistance funds issues. TTB, remember, the law does not allow beer distributor supplier just to give money to a bartender. That's the red flags that always raise. And those laws still apply, but they did clarify that you could add to these funds that have been set up. You can donate to them. And the only condition is as long as like here's money, but make sure I got my bar on my keg on tap when you open up again. That's the thing they're still going to be looking for. But they did clarify that it's okay to assist those funds. The next issue is the issue of hand sanitizers. Again, many of you are all involved in this. Some of you are now in the hand sanitizer business, whether as distributing or working with partners. They clarified. And it's more for the suppliers, but just to clarify, it's okay to sell that stuff. And that was a clarity that some folks in the industry had sought to get. And so TTB put that guidance out, and it's on their website. The next item is an item that is also an issue, gift cards. Some folks are concerned about helping out retail accounts. TTB put out this reminder, though, that the point of trade practice laws is to prevent upper tiers, owning and providing financial support to retailers. Gift cards can be a form of that. So they put out clarity saying, yes, you can buy gift cards from Visa, Amex, your local bank, maybe Macy's. They don't have, but you can't be using that money to buy it from an alcohol retailer. And so they put that clarity out there on Guidance Friday. So please factor that into your calculation. And then finally, credit terms. This is something that the TTB had clarified because some states had changed the amount of the normal law for TTB and the Federal Alcohol Administration Act is 30 days credit is the maximum allowed. Some states went up to 120 days. So TTB put in as a part of this emergency order that expires on September 30th, they will not be enforcing up to the 120-day limit. And that's something for us to be mindful of. It's something that as beer distributors, state law always controls over the federal law issues, but it is something we just all need to be mindful of. As I think we all have a lot of concern about a 120-day credit term being out there in the public conversation. So those are some of the issues. The most important issue, just as a reminder on this call, though, is the reminder that state law controls for beer distributor transactions, and to the extent that the TTB says one thing, always check with your state ABC. Your state ABC guidance is critically important, and your state associations have been doing fabulous work getting that needed clarity to determine what is the legality in your marketplace. For additional resources, NBWA has a website that has trade practice information, has a short video and links to other helpful information. If some of your on-premise team is not as busy these days because of this, and this might be the time to refresh for your best practices and your compliance plans to make them bone up on some of the trade practice laws that are out there. And then finally, last slide is just, we're going to have to continue here at NBWA with the TTB. We're talking to them several times a week, it seems, just trying to find out what, asking for guidance or clarity for our members or what's next. We also need every one of you to currently work with your state associations to actively engage with your state ABC. Dave will talk about this in the next program, but we're very concerned about exceptions to tied house laws, trade practice laws becoming, folks trying to make them permanent. And it's very important for you to be engaged in that process to prevent any harm to the regulation of alcohol. Obviously, you have a lot of product. Lester talked about how much beer is out there. You have your business plan to how you're going to clear that out, but also just be mindful of the state and the TTB regulations on this. And as Craig preached earlier, document, document, document. And then one thing to keep in the back of your mind is, what did we like about this shutdown? What can we prevent from the next shutdown? There's possibly, likely, maybe flare-ups of this disease, and there will be efforts to impose new types of regulations for that. Let's get ahead of that and make sure that we can limit any harmful changes to regulation, as there are folks with other agendas than the agendas of beer distributors on their mind. And this is just a final plug for the Center for Alcohol Policy. It will be working on some papers, and this is a great opportunity for us to use the Center for the world to use the Center for Alcohol Policy to highlight why alcohol needs to be regulated, and some of the great benefits the pre-COVID alcohol regulatory regime provided. So with that, I'll turn it back to Craig.
Thank you, Paul. I think one of the things that was really on great display over the last 8 weeks was the level of work between NBWA and our various state associations. Those folks that are in your state capitals, their role has never been more important. And in our efforts to provide support, assistance, and leadership with those folks, Dave Crispin spearheads that effort. Take it away, Dave.
Well, thanks, Craig, and good morning, everybody. Really not unlike alcohol regulation itself, we have seen each state tackle this pandemic differently. And certainly state governors have been at the forefront of issuing executive orders and making the calls of how business is operating in their states. From stay-at-home orders to essential business designations to now phased-in plans for reopening, each state is certainly handling this differently. Part of what we've seen as states have addressed this pandemic has been a loosening or suspending or even creating certain exemptions around different alcohol laws across the states. Certainly the majority of these law changes and suspensions, if you will, have been focused on the retail to consumer transaction. Largely these have been done in an effort to throw a lifeline, if you will, to closed bars and restaurants, tap rooms, breweries, wineries, other businesses that almost overnight were forced to close their doors. Some examples of these, we've seen them, but increased e-commerce opportunities through online ordering, the ability to pick up alcohol at curbside pickup, the expansion of to-go deliver or to-go products to include cocktails to go. In some instances, we've seen the ability or the privilege given to deliver product locally to consumers' homes. And in a few cases, we've even seen direct-to-consumer shipping privileges given to some of these accounts. Not every change has been directly focused on that retail-to-consumer piece of the transaction, no. As we just heard Paul talk about, we have seen a number of states that have looked at extending credit terms for retail payments to distributors. We've seen a number of states that have either extended or even permanently extended license renewal deadlines so that license holders don't have to worry about the cost or the burden of renewing their license during this pandemic. A number of states have taken to deferring any number of alcohol-related taxes on these businesses to later this year or even into 2021. And certainly many of you know that a number of state regulatory agencies have made clarifications on product returns and making sure that wholesalers can legally go into these accounts and take back products from these closed stores. So moving forward, when we return to normal, and none of us know when that'll be or exactly what it'll look like, we are certainly of the opinion that these executive orders are generally tied to each of these individual states of emergency. And as those orders expire, so too should these temporary privileges and these loosening and suspending of different laws. Just like it's been the case for 80 plus years, the appropriate venue to talk about these changes and any potential permanency to any of these laws is the state legislature. This is when the relevant stakeholders get in front of the relevant committees and relevant legislative leaders to share all sides of how groups are impacted by these changes. And while this pandemic certainly has changed all of our lives in drastic ways, I think changing legislation going forward should still take place in the legislature and not just be a permanent extension of a temporary privilege. That said, we have certainly seen special interests on the other side and in favor of permanency of some of these changes being very vocal about it. Op-eds, podcasts, stories, you name it. The other side is certainly turning up their advocacy already, and no doubt as state legislatures come back into session, we're going to see, and we've already seen in a few states, efforts to make some of these changes permanent. So what can you do? What should you be doing now? The first and most important thing is to be active and engaged in your state association. MBWA communicates daily with your state association execs, and I know they all trade notes with each other and have been working on this, but ultimately that's where policy directives are going to be decided, and that's where a advocacy direction is going to be orchestrated. So communicate with your state exec, hold Zoom calls, hold teleconferences, and make sure you're aware of what's happening in your state and kind of where your other distributors in the state see things going. Probably the most important thing we're going to have to do from there is prioritize. There's been a lot of changes implemented. Which of these are the biggest threat to our system and certainly to your businesses? I have here as an example, is an expansion of curbside pickup as big an issue as a permanent extension of credit terms? I think it probably definitely is not. So, make sure, as they say, you keep your powder dry for those challenges that are certainly the most important to you. Now, the other thing you need to do is identify allies. Who else is going to be concerned about some of these changes becoming permanent, and what can we do to get those people, at the table with us, so that's not just the distributor's voice that might be opposing some of these changes, but it's a coalition of folks. Paul just gave a plug for the Center for Alcohol Policy. This is another opportunity where the center can be that neutral third-party voice And the center has been very effective in bringing in other non-traditional allies who may share our opinion on some of these things. So certainly consider supporting the center and consider using the center in your various state sites. And then lastly, and I think it'll transition into the next module of this webcast, but the most important thing you can do right now is keep sharing your story. You guys are keeping the supply chain going. You're keeping food on a lot of people's tables. We're seeing every day the incredible things you're doing in your communities above and beyond your normal business operations. Make sure legislators know that. Make sure leaders know that when times got tough, you guys were here, and that certainly matters. So with that, Craig, I'll kick it back to you to keep on rolling.
Thanks, Dave. I think that's absolutely right. The prioritization's never been more important. And also telling your story's never been more important. And to tell us a little bit more about that is MBWA's Vice President of Communication, Lauren Kane. Lauren?
Thanks, Craig, and hello, everybody. Today, I'm going to talk about how you can tell your story during COVID-19. As Dave just discussed, distributors across the country are stepping up to support their neighbors and their communities in so many different ways. And you're doing this while you're continuing to operate and keep the economy and the supply chain moving. And this is a really great story to tell. So let's talk about why you should share your story. Well, people and reporters at this time are desperate for good news. Every time you turn on the news or you read the news, you see a constant stream of negative stories. Well, local media in particular is looking to break up this stream of negative news with some positive, uplifting stories. So I think that you'll find great luck if you actually reach out to your media with some good news. The second thing is that it boosts your reputation in the community. Now, I do understand that some might be hesitant to share their story for fear of looking self-serving. But as I just said, the public really wants to hear good news right now. And on top of that, lawmakers and policymakers read the news as well. And so they'll see your good stories in the news. This is also an opportunity to remind the public that you are a local business and that they can count on you in times of crisis, that you're going to step up and help the community and you're going to be there for them. Next slide, Dave. Okay, let's talk about some tips for communicating during a crisis. It's very important to demonstrate how you are part of the solution. How are you contributing to your community, to the supply chain, to the economy? Pull in that community partner you're helping out. See if they'll offer a quote or be interviewed. Chances are they probably will. They'll like the publicity as well. And that just adds more of the validation to your efforts and makes the story stronger. Make sure that you're monitoring the news of the day so that you can answer any hot button issues that might arise. As Laurie just discussed, the PPP is a hot button issue for sure for anyone who owns a business and is going to be participating in that program. MBWA has talking points available if you do get that question or you're concerned about getting that question. So please do reach out to us and we can help you there. And finally, make sure you're relaxed and just be yourself. I know that can be intimidating with media, but do your best to be genuine and authentic. Okay, now let's talk about some tactics for telling your story. First of all, please keep MBWA apprised of all of the good work that you're doing. We have a daily newsletter called Daily Brew that goes out to about 8,500 subscribers each day, so we'll be sure to include that information there. And we'll also amplify it on our social media channels. In terms of traditional media, there's several things you can do. You can write a simple press release, you can do a media pitch, or you can do a short letter to the editor, which will appear on the opinion page, one of the most widely read pages of the newspaper. And MBWA has templates and can help you put together that media pitch or the press release. We can also help you put together a list to target media that might be interested. Other things you can do to tell your story would be to create a video. A video is a great way to capture your community efforts. We've seen some awesome videos from MBWA members and state associations, and these videos can live on for a long time. So you can take them off the shelf and dust them off and reuse them at a later time. Also, be sure that you're photographing everything. It doesn't have to be high quality photos, but just having those photos to document this moment is really important. And you might even want to consider hiring a professional photographer since this is such an extraordinary moment in time. And finally, be sure to share your news on social media. There's lots of eyes on social media right now, so this is a great time to reach your audience. And again, as I've mentioned throughout, people are looking for those uplifting, positive stories. Okay, now that I've talked about how you can share your story, I'm going to talk a little bit about how NBWA is amplifying the good work of distributors across the country. We have launched a hashtag called Delivering More to signify all the ways that distributors are going above and beyond to deliver for their communities. As part of that campaign, we have created 2 gifts, which are small video snippets. One is a thank you gift for first responders and frontline workers, and the other is a gift bringing to life all the ways that distributors are delivering more. They're delivering hand sanitizer, masks, food, and water. We've also produced a couple of videos, one highlighting all of the great work that you're doing and the community involvement across the country, and another in honor of Tavern Month. As you know, the bar and restaurant employees are among some of the hardest hit during this pandemic, and we have seen great outpouring of support from distributors across the country. So we've used this Tavern Month video to highlight how we are standing with all of our bar and tavern partners. And finally, hopefully most of you are aware of our Employee Spotlight program, but this is an opportunity for you to highlight an employee who is going above and beyond. It's a simple nomination form that you can fill out on the NBWA website, and then we'll flip it into a press release and some social media assets for you to share. And I'm sure at this time you have many employees that are stepping up and doing extra to help out their community. So please do consider nominating an employee for that. And then finally, just to stay up to speed on all of this, make sure that you're following NBWA on all of our social media channels. And I just wanted to share a few of the communications resources that we have here at NBWA. One is called Tips on Tap, and it is our monthly newsletter with information just like I'm sharing today. We send it out each month. We have dates in normal times of dates that you could highlight, ideas for social media. During this time, we're really populating it with COVID-19 ideas. And then we also have a communicators group, which is open to anyone, but it's really geared toward communicators, and we share best practices and tips for messaging. So if you would like to be a member of that group, or you know someone on your team who would, please email Annelle Jones at ajones@nbwa.org. And before I conclude, I just want to leave you with a couple of asks. Please, please, please share your story with NBWA. We want to know about the good work that you're doing, and know that we're always here as a resource to help you. So please don't hesitate to reach out for anything. And Craig, with that, I'll turn it back over to you.
Thanks, Lauren. And as we were unfortunately not able to get together at the end of March and 1st of April for NBWA's legislative conference. I know all of us missed seeing so many of you for that annual event. But by the same token, we are very much looking forward to NBWA's convention in the fall. And to give us an update on what we've got to look forward to is NBWA's Vice President of Membership and Meetings, Patty Rousey. Patty?
Thanks, Craig. Just like you are looking at the future and your new normal, NBWA is also looking at the future and planning for our fall convention. The 83rd annual convention will be held October 4 through 7 at the Hyatt Regency Orlando in Florida. We've heard from you that you want to get together, catch up with friends over a cold beer, and I think we will all be ready to share stories from this moment in time. NBWA will be working with our hotel partners, following guidance by the state, and using the CDC guidelines to create a safe place to gather. As a reminder, this year we have a product showcase as part of the schedule. There are breweries and beverage companies, as well as service providers, that are supporting this year's show. In fact, the showcase is more than 50% sold. We are working on education programming and the speaker lineup, as well as how we will be serving cold beer while promoting social distancing. Like you, we are working to create our new normal. All of these details will continue to unfold on NBWA's website. Registration will open soon, and we are looking forward to seeing you in Orlando. In addition to the fall convention, in November, we will hold the Next Generation Success and Leadership Conference. The dates are November 11 through 13 at the Grand Hyatt Denver in Colorado. The program is coming together and registration is open. Part of the program is the sharing of best practices. Next generation leaders have the opportunity to present to their peers and show off the great work they are doing in their individual distributorship. These best practices are submitted through a portal on the NBWA website. The opening will be announced in the next couple of weeks, so stay tuned for that. If you have next generation leaders that are not involved in this group, please reach out to NBWA. We will get them involved so they can begin to be a part of this group, receive the important information, and attend this conference in November. Thank you. We look forward to seeing all of you in the fall and sharing all of our great stories. And with that, I'll turn it back to you, Craig.
Thank you, Patty. And I hope you all have found this program to be value added. You've heard from a number of NBWA's key leaders. Want to make sure that everybody's aware of our COVID-19 resource page. It is available on NBWA's website, nbwa.org. It has got all of this information organized in a fashion where you can share it with your employees and team members and access it freely as issues come up related to COVID-19. But we first and foremost want to thank you for your time, and we also want to thank you for everything that you've been doing over the last 8 weeks. When I look at other organizations and I talk to other association leaders, I'm reminded that we represent some truly, truly special people. And one of the things that's important as we're dealing with all of the challenges from this pandemic is that all of NBWA's member companies have been open. And that is really, really important to remember. And I know this has been difficult, and I know this has been very hard. I know some of our members have lost loved ones and have lost employees during this time period, and our hearts go out to you. But I also think we've got to balance that seriousness with also a sense of gratitude and the fact that we get to work in this industry. And we also know that we get to help the on-premise return. And we know that we get to continue working each and every day to put those employees to work. And as Dave Crispin said, put groceries on their table. This is not going to be an easy lift, folks. You guys know this. But I am confident that as we continue to work together and as you all continue to provide us information, we're going to come through this and we're going to be stronger as an organization and as an industry. Thanks for your time today, and we appreciate you. Keep those communications coming, and best wishes. Cheers.